Let's get ready to mortgage. He is the prince of programs, guru of guidelines, master of matrices. He puts the fun in funding. Please welcome Mark, Mr. Mortgage, I Tell.
All right. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. And you, my friends, are in the right place. If you've got questions and you want answers, you can't handle the truth. Yes, you can handle the truth. And that's what we're going to give you. You're in the right place if you want the information, the data, not the headlines, but the data. And the tips, the tricks, the strategies, the real info, if you will, so you can go out there and make better real estate and mortgage decisions for you and your family. Guys, we do this each week right here, same bat time, same bat station. We're so glad you're with us. Each week we dive into the data, but more importantly, we take your questions, and we're super excited to do that. If you have questions, you can call or text the Anytime hotline, which is 855-462-7292. That's 855-462-7292. That is the Anytime hotline. It rings here in the studio when Jen and I are doing the show and pushes to my office the rest of the time. So that number one more time, 855-462-7292. And you heard me mention Jen. She is my producer. She's the one that makes me sound good, that keeps me motivated and gets me on the air each week. So, hey, Jen, how are you?
Good morning, Mark.
Good morning. Are you ready to rock and roll? Are you having a good Thursday?
Happy Thursday, everyone.
Happy Thursday indeed. We are ready to get started. So, hey, before I do, there's a ton of questions I'm getting each week, both in my practice and on the air, regarding what in the heck is going on with interest rates. It seems like every day they're ticking up a little bit higher. And there are lots and lots of concerns surrounding that. What is that going to do to the housing market? And we talk about it all the time, right? Supply and demand controls prices, not the cost of money, but the cost of money certainly is slowing demand. There are a lot of people out there that are just, they're throwing their hands in the air, and just when they thought they had a reprieve from this red hot seller's market where it was, the highest cash offer was the only thing being considered, and there were lines of people outside of open houses. Remember that? It seems like it was 100 years ago, but it was just a few months ago. And people were super frustrated going out there and making 10, 15, 20 offers before one got accepted. And then all of a sudden the market transitions a bit, and those people are feeling like they've got a shot at this again. They're out there looking at 4 or 5 open houses on a weekend, and then deciding which one they wanted to buy and making the offer accordingly. Well, all of a sudden, interest rates, they had jumped from the 3s to the 5s, and people had kind of digested the 5s in the, what was it? I guess around June, which was very, very recent, right? It's not that long ago. Well, guys, we're up around 7 now, and some people are throwing in the towel. And guys, the interest rate is not the most important number in the transaction. And I know that sounds crazy and it's a hard pill to swallow. But when you're qualified for a mortgage, it's based on a monthly budget. The only thing the increase in interest rate does, it doesn't change that budget number. It changes the loan amount in relation to that payment. So if you're paying, $3,000 a month, maybe back in, January, you could have purchased I'm guessing, I haven't done the math on this, but maybe a $525,000 house. And then perhaps in July, when rates were, closer to 6, maybe that number came down to 4.25. And now you're thinking, well, 375 is the price range. So the only thing interest rate controls is the amount of money that you can buy for that payment. And the reason I'm sharing that is oftentimes people think they don't have an option. They're priced out of the market because of rate or whatever the case may be. And then they're surprised to learn that the budget number still works. And then oftentimes, again, surprised at how much they can buy for that amount of money. So interest rate alone should not drive your decision, because if real estate is still appreciating and the budget number works, right? So let's say, to use that example we were just talking about, you were paying $3,000 a month in rent. Guys, that's crazy. Go out and buy something for $3,000 a month, because even at a anemic 3, 4, 5, 6% appreciation rate, which is where we're likely to go, it still makes sense to own a piece of property. And the reason I say that is the property is appreciating, right, at that lower rate, but still appreciating. So it's gaining value the longer you own it. But each month that you make a payment, you owe less. A little bit of that goes towards principal. And over time, a larger and larger percent of your payment goes to principal. The reason I'm sharing that is right now, today, there's an opportunity in the market because you think 6 or 7% interest is high. If you wait another 6 or 12 months, it's likely that we're going to be in a higher interest rate environment. So, don't wait until rates are 8 or 9% and look back and say, God, I had a shot to buy something at 7. What was I thinking? Just make the move. We freeze, right? We have a tendency, and I liken this to just about anything, whether we're trying to quit smoking or we're going on a diet or we're going to go to the gym and start working out. It's easy to convince ourselves not to do something. It doesn't take much, If you're trying to lose weight and you're going to go to the gym and you get home 15 minutes late and you're tired and it's raining and you're like, hell with this. I'll just go next week or tomorrow. It's easy to tomorrow yourself right back into those oversized pants because you're not taking those steps. Well, that's the same thing with buying real estate, except instead of it being tomorrow, oftentimes it's next year because you sign a lease or you renew your lease and then you convince yourself you can't afford to break the lease. Decisions today will affect you in the future significantly. And I've worked with people over the years that there's a gentleman I'm working with. His name is Jeff. I'm just going to use his first name. He's been looking for 2.5 years. Well, guess what, guys? His price range keeps going down and down and down because interest rates are going up. Now, there are still opportunities out there, good opportunities, far nicer homes than he's currently renting, homes that are likely to continue to appreciate. But he's so frustrated now, he's going to, most likely, just based on his past behavior, he's going to sign another lease. Well, guess what? It's going to happen in a year. That's another years of appreciation that he's going to not gain. And we have no idea where interest rates are going to be in another year. So I say all that because the interest rate thing is super frustrating. Hearing the economists say we're heading into a recession when we're already in a recession, and then we have the president saying he doesn't think there's going to be a recession. Guys, it's easy to get paralyzed with all these contradictions. And the reality is it doesn't matter what the Federal Reserve does. It doesn't matter what President Biden says. Heck, it doesn't matter what I say. We're all in control of our own destiny. It's up to us to make decisions that are going to benefit us in the future. And you can wait. You can wait for the government to create a grant program for first-time buyers, or you can wait for this perceived market crash, which I don't think is going to happen anytime soon. And we're going to talk a lot about that on this week's show. Or you can wait for interest rates to drop, which again isn't going to happen anytime soon. And they're not going to go back to where they came from. Waiting doesn't do anything for you. It's just like waiting to go to the gym. I should do this, I should do that. Well, you end up shoulding all over yourself and nothing gets done. So if you're in a situation where you've got questions and you want answers, just give us a call or shoot us a text. I'll try to walk you through the scenario, but don't let rate scare you. Focus on budget. That's always the most important number. And yes, I get it. You may not qualify for that $500,000 house anymore. You may not, but you qualify for something. And the sooner that you get involved in ownership, the better opportunity you have to start gaining equity. And equity is the magic tool. I mean, people borrow against their equity to put their kids through school. You hear the spots on the station. I know a guy who refinanced his house to buy his mistress a condo. The equity gives you options, and without jumping into buying a home and becoming an owner, you're never going to have that equity. So we're going to cover all that. We're going to get to your questions. We got a super show lined up for you this week. I am excited. Jen's excited. She's going to get to your questions, but you hear the music. You know what that means? That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, we're going to dive into your questions. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We started our loan with a different company. They said we were approved, but at the last minute they told us there was a problem. I still don't know what went wrong, but thankfully our real estate agent told us about Mark. I was pretty stressed, but it's the perfect house, so we gave Mark a shot. He got it done. I'm not sure what was different, but I don't really care. We even got a better interest rate and with less money out of pocket than the first guy quoted us. It was a great surprise. Yes, I'm happy to recommend Mark and his Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are tuned into the Mr. Mortgage Show. What was that, Jen? What is that, Ren and Stimpy? I don't remember. You're making face. Mr. Mortgage, no? Don't do it? Okay. Well, you're listening to the Mr. Mortgage Show, and Jen is fed up. She put her hands on her hips and gave me the, that look.
Oh, Mark.
I'm sorry. I'll stop. Anyway, you're tuned into the Mr. Mortgage Show. We do this each week right here, same time, same station. We are excited, as always, to dive into your questions. And just quickly to recap, I was talking about how owning real estate in just about any market has made sense and at just about any interest rate. And I know it doesn't make it any easier to digest a 7% rate when you were expecting something in the threes. But guys, come on. Those were artificially low because of the pandemic, and we've obviously moved past those, that emergency pandemic mode that we were in. And this is all just, a natural effect of that. So yes, I do believe in the future rates are going to come back down a bit, but I think they've got some more upside from here. So if you're waiting to borrow money, it's most likely going to cost you more money than it is today. And we talk about it all the time. There are strategies to buy the rate down. There are some programs for investment properties with interest only periods. There's ways to work around the rate environment and get that budget number where you need it to be. And you hear me talk about it all the time. The budget number is the most important. And right now, today, there's still more demand in the market than supply. And you've heard me say it. I think interest rates creeping up are going to have a negative effect on supply because a lot of people are sitting at home right now with their feet up on the easy chair, drinking a cup of coffee with a big load of equity in their house and a very low interest rate, and they're unlikely to sell anytime soon because moving is going to cost them more money than they currently spend each month. And then lastly, there was an article this week about builder sentiment. Well, builders are spending money today based on gains they're not going to realize, sometimes for years. And with the cooling demand, they're not too excited about breaking ground on new homes that, starting a new project today might not put a shovel in the ground for quite some time. And they're saying next year, 2023, that there's going to be fewer new home starts, which is going to put more pressure on supply. And I'll post that article to the Facebook page. And that's a good reminder. Jen has given me the signal to remind you about the Facebook page. Check out the Mr. Mortgage Show on Facebook. We always post a bunch of data there each week, and I'll post that article. But, if there's less new homes being built and fewer people are putting their property on the market, it's likely that we're going to be in this supply pinch for a while. I think I read the NAR report earlier this week. I think we're the fifth or sixth straight month where new listing inventory is down. And what I mean by that, fewer people are listing their properties right now because of this. It's exactly what I've been saying from the beginning of this cycle. And with fewer people listing their homes, once the homes on the market get under contract and are sold, there's going to be fewer homes, less supply, which is going to most likely, in my opinion, continue to support the prices, at least in our market. So anyway, I'm going to dive into your questions. We can talk more about that if you wish, but let me throw it over to Jen for the first question of the show.
Brian sent this one. I'm buying a house and we're supposed to close next week. The roof is in bad shape. I'm okay putting a new roof on, but I don't want to pay for a roof until I own the house. Here's the problem. I can't get insurance until the roof is replaced. It doesn't leak. It's just 25 years old. Do you have any suggestions? Thanks.
Hey, Brian, I do have some suggestion. I'm stumbling there. Hey, Jen, that mic over on the hotline side doesn't sound great. Are you able to switch? No? Okay. Well, we'll have to try to get that fixed during the break, but the hotline mic sounds a little bit tinny, but I assure you that's still Jen. So we'll try to get that fixed. But hey, back to your question, Brian. So here's a strategy that we've used successfully in the past. And if your insurance agent can't do it, give me a call. I'm working with some rock star insurance agents, and they're getting not only some aggressive quotes for us lately, which is super exciting, but they're able to do things like this strategy I'm about to share with you. So you can put a builder's risk policy on the property right now, today, because you're going to end up putting a new roof on it. Now, with that builder's risk policy, your insurance carrier will likely write the homeowner's insurance policy at the preferred insurance rate of a new roof, right? Just had a scenario exactly like this in Port St. Lucie. The house needed a new roof, and the insurance companies would not write a policy in its present condition. The buyer was buying the house at a discount. Seth, I'm shouting you out right now, brother, because you hit a home run on that house and you made it happen, and I'm proud of you. But what Seth did was he had the roofing contractor already lined up, ready with a start date. They just hadn't pulled the permit yet because he didn't own the house. And he was smart enough not to give the roofer a deposit yet, again, because he didn't own the house. But here's what was really cool. Chris, my insurance guy, put a builder's risk policy on the property in its present condition, and then wrote the homeowner's insurance policy behind that at the great rate of a new roof. And then Seth closed and then put the new roof on the house almost immediately because he had everything pretty much lined up. And the insurance policy was already in place. He didn't have to have that policy or a new policy put in place after the roof. The moral of that story was it saved him, I think it was about $3,000 a year by doing it that way versus just taking the worst case scenario insurance policy and closing and then dealing with it later. So, and if I remember correctly, it made a big difference in his qualifying ratios back to that monthly budget number. Even things like an insurance policy can make a huge difference in that. But Brian, that, my man, was a brilliant question. There is a way around that a lot of people are going to get wrapped around the axle with that strategy. So if you need help with that, I'll write the scenario out and you can just share that with your insurance broker and see if they can do it the same way that Chris has done it for me in the past. But great question, my man. Hey, Jen, what else do we have?
Pedro wants to know, I'd like to pull out some cash to pay off my truck and credit cards. Is there a rule of thumb for how much money I can use to pay off debts with the REC refinance?
Hey, Pedro, thank you for that question. And yeah, Jen, you still sound a million miles away, but Pedro, vote for Pedro. What movie was that? Who remembers Napoleon Dynamite? Pedro, I'd vote for you, brother. Typically, what you're going to be able to extract in equity for a cash out refinance or the REC refi, which is the debt consolidation loan that we talk about. And there's some advantages to using that. There's some lower fees. But anyway, 80% of the value of your property is the magic number with a debt consolidation loan. So if your house is worth $500,000 and you owe $300,000, you could pay off $100,000 worth of debt, and just to use very round numbers. So that is another great question. I hope that information is helpful. But yeah, 80% of the value of the property minus your current mortgage payment is what people use the term tappable equity to describe. So that's the amount of equity that you can extract from the home, keeping the new mortgage balance at 80% or less, which is the magic number for no mortgage insurance. And that's the comfort level for most lenders with a debt consolidation refi. Always there are exceptions to every rule, and you can go beyond that. But the safe rule of thumb going into this strategy is 80%. I appreciate that one. That is another good question. Super excited to help if that helped at all. But hey, you hear the music. You know what that means? That's my cue. We'll be back in 2. We're going to try to fix Jen's mic during the break, but sit with us for 2 short minutes. On the other side of this break will be more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
We kept our business above water with credit cards during the pandemic. I'm glad we did. Business is better than ever. But I didn't want to be a slave to those credit card payments. I called Mark about the REC loan he advertises. Long story short, we did a REC refinance and paid off everything, even the car. Now we only have the mortgage payment. We're saving a bunch every month. Yes, we are happy to recommend Mark and the Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show, and we do this each week right here, same time, same station. And you heard the man, you can call or text. I really got to get him to remember to say that. You can call or text the Anytime Hotline, 855-462-7292, 855-462-7292. If you are just joining us or you've been stumbling around the dial and just tuned in, you are listening to the Mr. Mortgage Show, and we do this each week right here, same time, same station, and we take all your questions regarding real estate and mortgages and try to help you make sense of this crazy market. And we started the show off with some good questions just a minute ago. We talked a little bit about a cash out refi, or as we call our program, the REC refi, which is designed to reduce, eliminate, and consolidate debt by doing a debt pay down refinance strategy. And it's interesting, guys. We're seeing a lot of uptick in interest with that product. And I'm going to tell you why I think it's happening. Number one, a lot of people are freaked out by what's going on with the economy, right? Everybody's anticipating some pain ahead, if you will. And pain might just mean cutting back on going to the movies and out to dinner for you, and other people, pain might be something serious. Their businesses might be affected if we go into a full-blown recession. And we talked about the REC refi. Why I think there's an uptick in interest in that product right now is last year an equity line was the no-brainer, because an equity line rate, a year ago was 2 or 3%. Well, guys, we're seeing equity lines quoted anywhere from 5 to 13, 14%, depending on credit score and other factors. And if you can do a debt consolidation loan and get a rate in the 6s that stays fixed for, 15 years, 30 years, 20 years, whatever the term is, a 15-year loan would even be a lower rate versus an adjustable rate equity line that's going to start at darn near that same rate. That cash out or debt consolidation REC refi is starting to look attractive as home equity interest rates, home equity line rates have increased. So we had a question about that, and hopefully that information helped. Super question from the Brian came out of the box asking about insurance on a house that has an old roof, and we came up with a strategy to help him with that. So if you want to hear that again or you missed it, check out MrMortgageRadio.com for the replay of the show. Each week after we do the show, we put it back up online as a podcast. So check out Mr. Mortgage Radio if any of that is worth a re-listen. So anyway, let me throw it over to Jen, because your questions are my favorite part, and I know she's got more. Even though she sounds like she's talking through a tin can with a string going over to the board, we tried to fiddle with that mic during the break, and we're just going to have to live with it because I need her to help me with the show. So, hey, Jen, what's question number 3?
Rosie sent this question. Last week you talked about a 100% loan for first-time buyers. Can you please explain it again? That's a great question, Rosie.
Hey, Rosie, that is a great question, and thanks for that, Jen. I'd love to explain it again, and that's one more reason why. Check out MrMortgageRadio.com if you ever want to double back on some of this info. It'll be there for you. But to answer Rosie's question, we were super excited to announce a new loan program that we're offering, and we're about to roll it out nationwide. And we do have listeners nationwide, so I'm super excited about that. Actually, I was talking with Greg the other day, and I don't remember how many countries. I think he said 59 countries listen on the app, which is amazing to me that, someone in Istanbul might be listening to the Mr. Mortgage Show. I don't know why I did the Stimpy voice. I apologize. That was an accident. But anyway, 100% loan program that we have is a 96.5% first mortgage. It's an FHA loan. And then there's a forgiven grant that lays on top of that at 3.5%. So you borrow 96.5%, and there's a grant that gets you to 100%. The cool thing about the 3.5% is it's not a second mortgage that requires debt service or repayment, unlike the Hometown Heroes loan. And that's why I'm excited about it, because Hometown Heroes is a great loan program, but it's set up the same way. It's a first mortgage with the grant. That's the second mortgage up to $25,000, and that lays on top of your first to get you to 100%. But guys, you've got to pay that back. If you refinance or sell the house, you've got to repay the grant. This one is forgiven. So I like it better than the Hometown Heroes program. Now, the Hometown Heroes program, you can use that with a VA loan or a conventional loan. This one right now is just designed as an FHA program, but as it expands, I'm sure there's going to be, additional programs that we can use it with, but I'm super excited about it. So if you qualify for the FHA program at 96.5% for the first mortgage, then you can borrow 100%. And it gets even better. If you order by midnight tonight, you get the bamboo walk, the bamboo steamer, and I don't remember, the walk and the bamboo steamer, right? But wait, it gets better. The seller can pay up to 6% in the form of a contribution towards your closing costs, which is super helpful because if you got a 6% seller contribution, or maybe even a 4%, depending on what your closing costs look like, you could essentially get into the deal for, no money out of pocket or very little money out of pocket. And we see that all the time. Most of the people that are struggling with getting approved for a home loan, it's not their credit and it's not the payment, it's the down payment that they're struggling with. And this is an answer to that. So great question, Rosie. That 100% program, you're going to be underwritten just as if it was a regular FHA loan, and then the 3.5% gift grant, whatever you want to call it, lays on top of it as a forgivable second. So super cool loan program. If you need more information about that, just give us a call, 855-462-7292. That's the Anytime hotline. But hey, Jen, what else do we have?
Maxine is asking, with all that is going on with the economy, we are considering opening an equity credit line, just in case we need it later. Is there a downside to having an equity and not using it?
Hey, Maxine, that's a great question. Man, I can't get over how far away you sound. I can almost touch her, I swear. Hey, Maxine, that's a great question. Thanks for that. So there's not a downside to opening the equity line and not using it. Oftentimes, if you get the equity line with your bank, they may pay or waive the closing costs. So there's either very little or no money to open the equity line. And if there are fees, sometimes they'll even pay it from the equity line if you don't want to pull the cash out to pay the closing costs. But anyway, it's just going to sit there like a credit card that you don't use. Typically, the drawdown period for an equity line is 10 years. So if you don't use it for 10 years, they'll either have to extend the drawdown period or just close it out. But, not a bad strategy to have some, just in case, some emergency money, if you will. But just know that if property values decline, that they can reduce the equity line or close it depending on what the market's doing. Now, I don't think we're going to get into a severely declining market. You've heard me say that I do think some areas are going to pull back a bit. I think it's crazy to assume that that's not going to happen. But I also think overall that prices are supported at the moment because of the supply and demand equation that I always talk about. But just know that the equity line can be called due or closed at the bank's discretion if your equity position changes because of a declining market. But that being said, great strategy to have it there. What do they say? It's better to have a gun and need it. Or I heard even a better one the other day. It's better to be a warrior in a garden than a gardener in a war. So I guess having that money available, and that was Joe Rogan who said that, who's actually a quite interesting dude. But that was a great question. I hope that helps. You hear the music, you know what that means. That's my cue. We'll be back in 2. On the other side of this break, we're going to dive into more of your questions. And I always encourage your questions. You can call or text them to 855-462-7292. That's 855-462-7292. Or send them to us via email. Just go to mr.mortgage, never a .com. Just type in your browser address bar, mr.mortgage, hit enter. Upper right-hand corner of the page, you'll find the Contact Us box. You can submit your email questions there. But anyway, that music means we're going to jump into a break. We'll be back in 2 very short minutes for more of the show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction, and that starts with a really great agent. If you've got a great agent, that's awesome, but if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com, www.reallyGreatAgents.com.
Here's another 5-star review.
As a realtor, I have a bunch of mortgage brokers to choose from, but I prefer to work with Mark and his Mr. Mortgage team. In this crazy market, there is no room for error, especially on the mortgage side. Mark's team moves fast, keeps everybody in the loop, and makes things happen. They always give my clients a great deal and take the time to walk them through every step of the process. When you're considering a lender, I encourage you to talk to Mark Eitel and the Mr. Mortgage team.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. We do this each week with the goal to give you the inside info, the data, the information, tips, tricks, and strategies that you need to make better real estate and mortgage decisions for you and your family. Jen, my lovely producer, is in the studio with me as always. She is rocking the board, the hotline, the text line, and jumping back over to the computer to check for emails. So she is getting your questions on the air, and I certainly appreciate her for doing that. Speaking of your questions, we've had some really good ones so far. We talked a little bit about opening an equity line and not using it during that last segment. And we talked about that 100% loan program that I'm super excited about. So guys, if you want to hear that again, or if you missed it, check out MrMortgageRadio.com, MrMortgageRadio.com. You can find all the replays, all the podcast episodes there. I think there's 80 some odd episodes up. So we are definitely adding to that library all the time. And once we're done here, Jen will post the recorded version of the show up to the podcast page. So MrMortgageRadio.com is where you can hear the replays, or visit Mr.Mortgage. No .com there, just Mr.Mortgage. Hit enter, will pop right up, and you'll be able to contact us through the website should you wish. But great questions so far. I am going to toss it over to Jen for another question. Do we have another question? What do we have?
Jeremy has this question. I really want to buy a place, but I'm not sure it makes sense with these interest rates. I'm just unsure. Do you think the government will keep raising interest rates?
Hey, Jeremy, that's a great question. I do think the Federal Reserve is going to continue to raise interest rates. They almost have to, right? They're trying to slow inflation down, and inflation is just kind of slapping them out of the way, saying, hold my beer, watch me go. I mean, I think everybody's surprised. Actually, that's not true. I don't think you and I down here in the real world who are paying for groceries and gas and travel expenses and all the costs of daily life are surprised to hear the inflation numbers. But my God, the president seems surprised by it, and the Federal Reserve just keeps, scratching his head and raising rates. But to answer your question, I do think that, there's a strong likelihood that we get at least one, most likely two significant rate hikes to end out the year. And with that being said, I don't want to turn this into Mortgage Economics 101, but what's having more of an impact on the interest rates for the mortgages anyway has very little to do with what the Federal Reserve is doing by raising the overnight rate. The mortgage-backed security market is seeing a bit of a liquidity pinch right now because in the past, the UK and China were, some of the largest buyers of our mortgage debt. And not to, again, turn this into an economics, dissertation, but when mortgages are issued, they're all put into a big pile and they're securitized by mortgage-backed securities, and they're sold on the secondary market so that lenders can recapitalize and lend more money. And just as supply and demand is controlling housing prices, so supply and demand is controlling interest rates. And what I mean by that, there's not a tremendous appetite in the secondary market for mortgage debt, U.S. mortgage debt at the moment. So in the interest rate world, or the mortgage-backed security or the bond world, when prices go down, interest rates go up. So because there's not a lot of demand, prices are going down and rates are going up. And that's what's having the major impact on interest rates right now. Even though the Fed is increasing the overnight rate, that directly influences things like credit cards and any adjustable rate debt. Home equity lines of credit, as we spoke about, have jumped significantly this year as far as the interest rate. But to answer your question, I do think rate hikes are in our future, and I do think higher interest rates are in our future. So if you're waiting, banking on rates coming back down, I don't think that's happening anytime in the near future. And where are prices going to be at that point? We talked about even a very conservative appreciation rate of, low single digits. Still, your property's worth more each month, each year that you own it. So, I would look more at your budget. I would stop being frightened by the headlines and look at your budget because, the cost of money shouldn't be the most important factor. It's your budget. And let me throw this out at you. This is something I ask everybody who is rate reluctant, and I get it. I don't want to pay any higher interest than I have to either. But I share this story. I had a client with a really, really cool sports car, and we were talking, and he was hesitant to buy when rates were in the 4s. And I switched the conversation to his car, and I just said, "Hey, that's a really cool car. Do you like your car?" "I love my car." "Hey, that's great. What do you pay for that car?" And I'm just, I'm doing this from memory, so I'm using round numbers. I think it was like $600 or $700 a month. And I said, "That's great. So $700 a month, it's worth it?" "Absolutely. I love my car." So he had made the decision that $700 a month, that car was worth either the utility or the pleasure that provides for him, right? That's how we almost justify any product that we buy. What's the monthly budget? So then I asked him a very simple question. What interest rate do you have on your car? His face went blank. He had no idea what his interest rate was on his car. And I don't remember, but my point in this story isn't what the rate was. It was, my point in this story is that the rate had zero to do with that purchasing decision. And ironically, that car is going down in value each month, where your home, unless something catastrophic happens, is going to hold or increase value over time. So it's just interesting to me as humans how we look at interest rate in the housing market, but we consider it we don't consider it very often in any other place in our life when we're making a purchasing decision. My motorcycle costs me $200 a month. My boat costs me $1,400 a month. My car costs me $700 a month. Nobody talks about the 11% interest, the 16% interest, the 24% interest on your credit card. You just know what the payment is. But hey, my man, that was a brilliant question. I don't think rates are coming down anytime soon, and I don't think they're going to revisit the 2s and 3s anytime in our future. I think we're going to be long gone by the time, if that even happens again. But anyway, great question. Hey, Jen, do we have another one?
Here's a question for Max. So I've heard you talk about buying down the interest rate. It makes sense. But isn't it better to just pay a lower price for the house? What are the pros and cons of each?
Hey, Max, that is a fantastic question. And I am so glad you asked. I'm going to share a story. You've heard me mention it in the past. I do a conference call for realtors. It's a nationwide call. It's Tuesdays at 2 o'clock. And it's a Q&A. They call in, they have questions, program questions. What are we seeing work? Everybody just kind of talks through the challenges that they're having. And I host that with 3 other mortgage professionals from all over the country. And this past week, my friend Jasmine co-hosted. This is a real scenario. This is live action. They were in this exact same situation, and they were going to offer $10,000 less on the property. And the agent and the buyer called Jasmine to walk through the math. And a $10,000 price reduction for this particular buyer's scenario was going to save them roughly, let's call it $50. It was 40 something, but let's say $50 a month on a $10,000 price reduction. With that seller contribution that they were able to negotiate, the reduction in interest rate, and I'm doing this from memory, so I'm going to be conservative, was around $200 a month in the payment. In that example, buying the rate down had 4 times the effect on the payment than lowering the price. So in that example, if budget is your concern, you can lower your payment more by buying your interest rate down than you can by paying less for a property, unless it's significantly less. But you can see in that example how much you would have to move the price down to save the same amount of money that you would by buying the rate down. That is a brilliant question, and I hope that illustrates the power of buying the rate down. And that's why I said in the opening of the show, and if you missed it, check out MrMortgageRadio.com, and you can hear the show again. There's still opportunity in the market, and strategies like this can buy the rate down. And we're focused mainly on that budget number and not the interest rate, because that interest rate can change and move. You can refinance it later. Anyway, great question. I hope that illustrates how a rate buy down can be more beneficial than paying the lower price for the property. I appreciate that. Hey, you hear the music? You know what that means. That's my cue. We'll be back in 2. Sit tight for 2 minutes. On the other side of this break, Jen and I will be back for more of your questions and more of the Mr. Mortgage Show. Hey, it's Mark Eitel, host of the Mr. Mortgage Show. You hear me all the time talking about the need to have the very best team representing you in a real estate transaction. And that starts with a really great agent. If you've got a great agent, that's awesome. But if you don't, check out www.reallyGreatAgents.com. There you'll find the best of the best, regardless of the city they work in or the brokerage they work for. www.reallyGreatAgents.com. www.reallyGreatAgents.com.
Here's another 5-star review.
My wife and I own a small business. And the way our accountant file our taxes, we don't show much income on tax returns. Because of this, it looks as if we don't make the money. This was a problem for our bank when we applied for a mortgage. But not for Mark. He verifies our income by using our monthly bank statements. Mark and his Mr. Mortgage team made a big difference for me. Yes, I am happy to recommend Mr. Mortgage Mark.
It's that time of year again. Time for the Red Devil Cycles Toy Run. Join us Sunday, November 20th. The ride starts at Pineapple Park in Jensen and rolls out to Timer Powers Park, Indiantown. It's going to be an awesome ride, a great day, full of food, fun, music, raffles, giveaway, and so much more. $10 per bike plus an unwrapped gift. Need more info? Check out reddevilcycles.com or give Luann a call at 772-221-8616. Put a smile on a kid's face and some wind in yours.
Are inflation and everyday expenses eating into your retirement income? Maybe you've considered a reverse mortgage and have unanswered questions like, do I still own my property? Can the bank kick me out? What happens when I die? Can I still leave my house to my kids? These are all great questions. Visit www.moreaboutreverse.com to learn more. That's www.moreaboutreverse.com. www.moreaboutreverse.com.
Hey, it's Mark Eitel here, host of the Mr. Mortgage Show. And you've heard me talk about the valuation tool that we use in our lending practice almost daily. It's not quite an appraisal, but it's way more accurate than one of those online estimates. And we're happy to run one of those reports for you at no charge. Just visit freevaluereport.org. That's freevaluereport.org. Give us a little information about the property, and we'll be happy to send you your report. That's freevaluereport.org.
Welcome back to the Mr. Mortgage Show. Call us now at 855-462-7292.
All right, we are back. My name is Mark Eitel, and you are listening to the Mr. Mortgage Show. We do this each week right here, same time, same station, and super glad to have you with us. Appreciate you listening. If you have questions, call or text them to 855-462-7292. That's 855-462-7292. That is the Anytime Hotline. And guys, if you're just tuning in, you missed some good stuff. We've had some good questions so far. Check out MrMortgageRadio.com for all the back episodes of the show and the podcast, the daily dose, all that stuff is there. MrMortgageRadio.com has all the answers to life's questions. Well, not all of life's questions, but anyway, the questions that you're throwing at us. So speaking of questions, let me throw it over to Jen and keep them coming. What do we have, Jen?
Billy wants to know, how much of a mortgage can we get for $2,400 a month? I saw your Facebook post about rent payment versus a mortgage amount.
Hey, Billy, thanks for that. Guys, and if you're just tuning in, Jen is still in the studio. She's not in outer space. We're just having a challenge with that mic over there by the hotline. But when come over to this mic after you're done with your questions. But anyway, Billy, great question. Guys, I put a post up the other day on Facebook about tell me how much you're paying rent and I'll tell you how much mortgage you could qualify for. And that's an easy one, Billy, only because we just closed a transaction for two super cool people. Katie and David bought a house in Port St. Lucie, a $300,000 purchase. They did the FHA loan. They put 3.5% down payment down, and their payment is right around $2,400 a month. And that's a real live example with today's interest rates, today's taxes, today's prices, today's closing costs. That happened just last week. So that's a real Port St. Lucie example. I hope that helps. But for that money, you could imagine. Now, that being said, if you had a big down payment, you could borrow even more. But just to give you an idea, they purchased a $300,000 house, and that was about where their payment landed. So brilliant question. I do appreciate it. We've had some really good questions this week. I appreciate it. We talked about equity lines. We talked about 100% financing. There was good stuff this week. I appreciate you. I'm going to ask you for a favor. If you enjoy the show, if any of this information, if you find it valuable, if you think somebody could benefit, do me a favor and share the show. We're always trying to grow the audience. My goal is to help as many people as we can. If you know somebody who's thinking of buying or selling real estate or thinking of refinancing, I'd love a chance to talk with them. Introduce them to me, my team, the radio show. We'll be happy to answer any of their questions. I appreciate you. If you know anybody, the guy in front of you in Publix who's up there babbling about interest rates, just, swat him across don't swat him across the forehead, but get his attention and say, hey, you should call this guy. Talk to the Mr. Mortgage Show. We'd appreciate you for that. But hey, Jen, jump over to this mic and give the people the Anytime Hotline. Guys, this number works during the week too. When we're not on the air, it rings to my office. Jen, what's that number?
Call or text anytime on the Anytime Hotline, 855-462-7292. That's anytime.
Is it fair to say that works anytime? Guys, that's the Anytime Hotline. You can get us there during the week. When we're not on the air, it pushes to my office. But when we're in the studio, Jen's over there handling the phone calls, handling the text and the emails. You can find more information about me, about the team, about the company at Mr.Mortgage. Never a .com. Just go up to your browser and type in Mr. and then mortgage, and obviously the dot is the period, Mr.Mortgage, hit enter, and boom, will pop right up. And then you've heard me mention it a few times today. You can find all the recorded episodes, the podcast, the daily dose, and all the back episodes of the radio shows. And guys, we do this several times a week on more stations. So if you only listen to us here on your hometown station, there's another episode right next to it on the podcast page, which is Mr. Mortgage Radio. You can get your fill of me if you haven't had it already. But guys, what a great week. We certainly appreciate you. You brought some wonderful questions again. As always, you don't disappoint. It's been a fantastic week. Uh-oh, you know what that music means? We are wrapping up another episode of the Mr. Mortgage Show. We are always glad to be with you. You heard me mention it. If you know anybody who's thinking of buying or selling real estate, questions about mortgages or refinances, we'd love you to introduce them to me, to the show, have them call in, turn them on to the Mr. Mortgage radio.com, MrMortgageRadio.com. But hey, we're going to get out of here. It's been another great week. We appreciate you. Have a fantastic week. Jen and I are saying goodbye. I'm going to spare her because she's over on the bad mic again. But we'll be here next week, same time, same station. Guys, have a fantastic week.
That's a wrap. Join Mark Eitel next week for more thrilling, edge-of-your-seat discussions about real estate and mortgages right here on The Mr. Mortgage Show.